Hello, good afternoon. You're watching Your Stocks on CNBC-TV18 and I'm Vinny Motiwala. Let's look at what the market is doing. It's been quite flattish, recovered from the day's lowest point is what we're seeing coming in from the Nifty. And it slipped again. Yes, just a few minutes that it takes to slip in the market. But yes, as of now, the Nifty is down 0.4% in trade. Let's look at what the mid and small cap is doing because that was outperforming at one point of time. Is it managing to hold on to that outperformance or that too has seen a slight bit of a slip coming in? So yes, the Nifty mid cap also is seeing a bit of a decline from the day's highest point. It's down. It's as of now holding on to gains of 0.3%. At one point of time, it was holding on to gains of almost 0.8 to 0.9%. Similarly, for the small cap, it's still managing to hold on to gains of almost 1%. Let's pull up what the pharma space is doing as well. We have Cipla that's a bit under pressure. We have Sun Pharma also that's in focus today. So some of these pharma names today not managing to hold on, and Nifty Pharma, when you look at it, also is overall down in trade. Look at Cipla, decline of almost 3 to 4% that we're seeing in trade. Sun Pharma 1% decline there. But yes, that's how the market is looking like. We'll keep an eye out on that because we've seen some bit of a decline coming in the last 15 minutes of trade. But this is a show where we'll be solving all your stock-related queries. And to solve all those queries today, we have our experts for today, Rajat Bose of rajatbose.com and Sharad Avasthi, the head of PCG research at SMIFS, to answer all your stock-related queries. Very good afternoon, gentlemen. Thank you so much for joining in with us. And festive greetings to both of you all.
Good afternoon, and same to you.
So, let's start with the... Good afternoon. Same to all of you as well. But let's move on and get started with the first query. We have K.S. Rao, who's writing to us from Andhra Pradesh. Now, he's holding 100 shares of TVs Electronics at a price of ₹50 per share. He is a long-term investor and wants to know whether he should continue to hold this or look to sell, making some bit of a profit right now because, yes, he's bought it at 50 rupees only and now it's around 385 and I'm looking at TVs Electronics. Sharad, I'll start with you. What's the view coming in for TVs Electronics on the long term?
I think it's a good long-term story considering the group has been doing good work over the last few years. I think this is largely based on some holding company discount that the company can get. But standalone, I think the numbers have not been very optimistic of late. The company is not really reporting profits. Last quarter also, they had a minor loss. So I think in terms of holding discount, yeah, maybe it does hold some promise. But most of the TVS Group stocks are also trading at particularly high valuation only, particularly TVS Motors. So I think not much would be derived from there. So considering that, I think at these valuations, it's hard to form a view whether you should continue to hold or not. So I think TVS Electronics is better to book some gains out of it. Maybe over the next year and a half, you could get it at much better valuations. So I think even considering the holding and etc., I think unless and until something very material happens, we can't foresee much upside for the stock.
Okay, unless something material happens, you don't see much of an upside. And I beg your pardon, it was 358 rupees per share. That's what TVS Electronics is currently trading at. Rajat, what's your view on the technicals for TVS Electronics? How are you looking at it on the charts? Last 6 months, around 20% return that we've seen. Should the viewer hold or look to sell their stock?
Well, I would say that if the stock moves up and it tries to move further up from 363 to about 387. This is the major resistance zone as of now. If it manages to get past 387 and sustains there, then continue to hold it. If it fails to do so, then you better exit from this because in that case, the recent low around 330 or so might well be breached and it could go further down. Generally, the tendency would be to sell because in all likelihood, I am not expecting it to cross 387 decisively and move further up. So over the short to medium term, it is a sell.
Okay, short to medium term, it is a sell that's coming in from Rajat. But let's move on to the next query. This one is on Tata Consumers. We have Mohan Kumar, who's writing to us from Chennai, holding 500 shares of Tata Consumer Products at a price of 1,225 rupees per share. Wants to know whether he should continue to hold or look to sell this. Also wants to know your view overall on the stock for the long term also. Fundamentally, when you look at it, they reported the numbers. It was an inline set of numbers that came in, Sharad. What would be the key level that you're watching out for in the long term? What are the fundamentals looking like for Tata Consumers in the long run?
See, in the very long run, I think this could be a good bet to hold on to. Maybe 1.5, 2 years, in spite of it having very strong brands like Tetley, etc., even Starbucks, I think part of the valuation should derive comfort from the Starbucks growth that we are seeing. And with the type of urbanization we are talking about and the rise in per capita income, I believe these kind of investments or instruments should gain a lot of weight in the very long term. But I think these are all long-term stories, how they play out. Even Tetley internationally has been doing very well. So I think in terms of brands, they have a lot of very popular brands. Even Sampann, I think, is something where distribution reach might play a very big role, a very big role to play in the near to long term. The products are there, but I think in terms of valuation, where the discomfort is. And it was trading at 80, 90 times TTM, and now it is trading at 60 times 1 year forward. And the growth rate should be 18, 20%. So I think unless and until they can pull a genie out of the bottle, there is very little expectation that, you would gain much out of holding stocks which are trading at 60, 70 times forward. And I don't think there is a lot of value unlocking coming. And most of the brands are established brands. It is not that they would grow overnight into something else. In case there is a margin push, that could be one advantage. But I think maximum what could it do? FY26, you are expecting somewhere around 19, 20 rupees. Maybe it goes up to 21, 22. But even then, you're holding a consumer basket at, 50, 45, 50 times 1 year forward. So I think it's a tad expensive. I would avoid this. I think after the recent correction, maybe a Dabur would make a much better choice vis-a-vis this. Considering it trades at 40 times forward and the numbers improve, I think there the targets would be around 600. So compared to Tata Consumer, I would be happy buying a Dabur if you are buying for a 1.5, 2 year kind of horizon. But if you want to stay put into long term, I think over the next 4 or 5 years, this is a story where most of the brands could play out very well. And Starbucks could well be a story that could turn around even the 8 o'clock coffee, which is an international brand. I think that's a premium brand. That's also doing very well. So long term, yeah, they might pull up some magic. But 1.5, 2 years, I think maybe it's fairly placed.
Okay. Let's move on to Rajat. What's your view on the technicals? Like even Sharad was mentioning, we're seeing a bit of a correction also right now. Last 1 month down 14%. Would you look to, maybe enter the stock, maybe because the viewer is holding it? So they should hold, average, sell. What is the view on this?
See, the current rally is just a pullback rally. Or if I may say so, it is a kind of a suckers rally, not just in Tata Consumer. It is Nifty also shows the same thing. The bank Nifty is also showing the same thing. Now, if it were to move up and it can cross, if it were to cross, say, 1080, 1100, then you can continue to hold on. Otherwise, any rally that fails to take out 1080 to about 1100, you should get out the moment the rally stops, the moment this current short-term upward swing that is happening stops. It will fall. It will fall and it will again test 960, 950 kind of levels. It can even go further down. So I would still say any rally should be used to get out of this.
Okay. Any rally that you see in Tata Consumers can be used to get out. But let's move on to the next query. This one is on Zomato. And obviously, we do have Swiggy that will be coming out with its IPO soon right now. So we're keeping an eye out on Zomato as well. Now, Shashank is writing to us from Delhi. He's holding 1,600 shares of Zomato at a price of 77 rupees per share. Obviously, making a very good profit on that because Zomato trading around 247 as of now. Wants to know whether he should continue to hold this or look to sell. Sharad, what's your view on this one? What are we watching out for? Because now Swiggy is also going to be coming in, a listed player, one more listed player in this quick commerce space. What should we be keeping an eye out on?
Yeah, I think it's a welcome addition. This is a lone rider basically in this space. Reliance could be an indirect comparison, but it's on SOTP, it will be a small player. But I think, yeah, addition of Swiggy will result in some dilution. Some people would want to diversify across an area which is expected to have very high growth. And I think the Blinkit success has driven to most of the improvement that we have seen in the recent past. They have been raising the platform fees, but to expect this to continue in a linear fashion in the long term would be very difficult. I think most industries, as you grow into a particular size, you attract a lot of competition. We have been hearing about Reliance gearing up to provide something like Blinkit at no cost, basically. So I think these kind of challenges will keep coming for this industry. So expect linear growth would be very difficult. But at the same time, I think these are business models which could transform themselves over a period of time, and you could have new verticals coming up which give you a lot of growth, new growth basically. Like Blinkit wasn't there 2 years ago, and right now that is the growth driver. So for most of these platform businesses, I think these kind of disruptions will happen, positive as well as negative. But I think to expect linear growth to continue without disrupting any kind of demand in terms of their pricing, etc., and competition not coming up, I think that's a naive way to look at it. I think that is not how it will happen. So I think gradually, if you want to plan long term, even if you're looking at FY27, we are looking at what, 4, maybe optimistically 5 to 6 rupee kind of earnings. And it's already trading at 250, 256. So I think most of the positives are largely discounted, even on a EV to sales basis. Next 12 months, even it is trading at 9x. Today, you get an Ola at what, 5, 6x. If you want to bet on a growth story, you could switch into something like that also. The risks would be different. They have not performed very well. So that's a problem. But I think purely on an EV to sales basis also, I think 8-9 times I would not be very comfortable buying 1 year forward. But if you're a long-term player and you want to stick to it, I think then you can continue to stick to it. Maybe, FY26 numbers, 30% additional growth. So maybe 1.5, 2 years, you could look at, 30% kind of improvement from current prices. But that is an optimistic view. I think we will get fair chances to buy it much lower. At these valuations, I think it's better to book some gains and get out of the stock and wait for better opportunities.
Okay, book out some bit of a gains. That's the word coming in on Zomato. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll be answering more of your stock-related queries. Welcome back to Business Lunch on CNBC TV18. Markets not looking pretty, down 0.6% in trade as of now, as the Nifty trading almost actually at the day's lowest point for 24,300. That's where the Nifty is trading at as of now. And among that, the top losers are obviously coming in is Cipla. We have Dr. Reddy's, Trent and Shriram Finance among the top losers in the Nifty 50 as of now. So surely keeping an eye out on that. Pharma among the top sectoral losers, and even the financials. Some bit of a pressure coming in on that. That's how the market is looking like as of now. Not too much of a pretty picture. But let's move on, and moving on to the next query that we're keeping an eye out on today. We have Nalco. So Indira is writing to us from Vizag, who is saying that she's holding 470 shares of Nalco at a price of 176 rupees per share. Wants to know whether she should continue to hold or look to sell this. Rajat, what's your view?
Yeah, I would say that Nalco is still in an uptrend, and it is very close to its yearly high. So I would suggest a stop loss of about 200. If it closes below that, then only exit. Otherwise, continue to hold.
Okay. And Sharad, what's your view on this?
Yeah, I think though alumina prices have been going up of late, I think, and we are, if within the metals pack, we have to be bullish on something. We would like to be bullish on aluminum as a space because of the requirement in EVs. But I think at current valuations, I think again, you are fairly discounting 1.5 year. I think we were expecting a target of 225 to 30 on the optimistic side. And I think more or less prices have reached there. So I don't foresee much upside, and I don't think the China economic upheaval is anywhere near the end. So I think most probably we'll continue to see issues coming out of China. And if that continues, I think for most metals to sustain a rally would be difficult. For any kind of upgrades, I think it's still a bit far off. So I think at 225, 230, it's fairly fully valued. I think you should exit at current prices.
Okay, let's move on to the next query. We have Rajesh who's writing to us from Bangalore, holding 920 shares of NHPC at a price of 114 rupees per share. Wants to know whether he should look to hold this or maybe sell, because he's making a loss right now. What's your view on this, Rajat? What should the viewer do? Should they book out their losses right now?
Either the person can book losses here, or if it were to move up and it doesn't cross the level of 90 and starts moving down again, at that point of time, he or she can sell this. So my suggestion is that either sell here or sell on rallies, but definitely do sell.
Okay, sell here or sell on rallies, but sell is the word coming in from Rajat. And Sharad, what's your word on this? Is it similar and concurring with Rajat as well?
No, sadly, I differ. I think most of the correction more or less has happened. If you look at similar stories, I think SJVN would be a similar story where a lot of capex is expected. NHPC is also expected to incur a lot of capex. I think the capacity addition targets long term that they have put in are very strong. Right now, the valuations would be what? I think 19-20 times forward. And I think over the next maybe 1.5 to 2 years, you might not have much traction in terms of the capex being concluded. But the long-term targets are very robust. I think minimum they are doubling capacities from current levels. And I think 26 onwards, as those capacities keep getting added up, there could be a lot of, tailwind for the numbers. The current capacities are what, 7,000, 8,000 megawatt. And I think the capex that they're doing is roughly more than doubling that over the next, 4 to 5 years. And this is a decent story at 19-20 times. I don't think it's very expensive. Even now, you have a dividend yield of 2.5%. And most of these companies do roll out normalized dividends. So I think that dividend yield should also suffice over a period of time. And I think this is a good multi-bagger kind of story that we are betting on. And I think in the long term, this could be a very good story. You could look at more than doubling your money in this. So I think in the long term, you should continue to hold on. If you have a shorter term horizon, 6 months, 1 year, maybe it might not do much. But that also, I think after this recent correction, you would largely get market-linked returns. So 20-30% should not be very difficult for this. Most of the other stocks are trading at much premium valuations. This is a mini Ratna company. So I think the capex is very high, very strong that they are doing. And one should hold on to this as a good long-term bet, multi-bagger kind of story.
Okay. Let's move on. Vignesh is writing to us from Hyderabad. He's holding 700 shares of SJVN at a price of 133 rupees per share. Wants to know the prospects of his holdings. Rajat, this stock, obviously the last year it had seen a very good run-up. But in the last 6 months specifically, we're seeing that a slight bit of a correction has started coming in for the stock. What should the viewer be doing?
The charts are very similar to that of NHPC. And hence, I would say that either one can sell at current levels or one can sell if it fails to take out 120 to about 125 kind of range, because crossing that now would be pretty much difficult. Even if it does, it won't sustain there, and it will come down, and it might even go down and test 80 going forward. So I would suggest exit from the stock.
Okay, exit from the stock. And what is your word on this, Sharad?
I think this is also a similar story to NHPC, though, 1.5 to 2 year kind of forward valuations, this might look expensive vis-a-vis NHPC. But the type of increment that they're talking over the long term till 2040, I think right now they're 2,000, 2,500 megawatt. They plan to take this up to 25,000 megawatts. So I think these are companies which are, changing scales to a very different level. There might be times because, hydropower has long gestation, but they're also shifting a lot into solar and wind power also. And there is a lot of opportunity in those spaces. So I think these are companies that will do very well in the long term. Maybe 1.5, 2 years, there could be a bit of lull. But I think long term, this is again another multi-bagger kind of story that you should continue to hold on. Being a government-related entity, I don't think balance sheet issue should be so much of a problem. And I think long term, all kind of renewable power should do very well. So I think as a long-term investor, continue to hold on to this one also as a great multi-bagger bet.
Okay. That was the last query for today. So thank you so much, Rajat, as well as Sharad, for joining in with us and always solving our viewers' query. Happy festivities to both of you all. But, let's take a quick look at what the market is doing right now. Like I said, that market has given up all those, some bit of a gain that it had seen a short while ago. Now it's trading almost at the day's lowest point. 24,347 is what the Nifty is holding on to. And in terms of the top contributors that are coming into the fall today, we do have Cipla that is down and out on trade. We have, other than that, Dr. Reddy's, keeping an eye out on that. Some of these banks also not doing well. So something like an Axis Bank, let's pull that up. That's under pressure, as well as ICICI Bank too is under pressure. So financial side also is a bit under pressure today. But yes, that's how we are looking at it. In terms of SBI Life, that's 2% down in trade. Trent also declining by almost 2%. That's the top drags coming in for the Nifty 50 today. So that's what we're watching out for. Other than that, Reliance is managing to hold on to some bit of a green today, but quite active in terms of volumes, as well as Maruti. Keep an eye on that, holding on to gains of 3%. But that's all the time we have on this edition of Your Stocks on CNBC TV18. Remember, you can always write to us and email us your queries, and we'll address them with our experts. Don't go anywhere, and stay tuned in for Closing Well up next.